Big congrats on your 8.5 million financing.
The insiders and management own approximately 27 million shares and heavily invested, well financed now to continue to advance what we believe is an incredibly exciting precious metals and also potentially VMS, copper, volcanogenic massive sulfide copper and zinc targets as well.
I think it proves investor confidence that you could raise that money in the market and the volatility, especially currently in the last few weeks.
So, number one, we're in the commodity we like. We're in a place we know we can mine. It's a safe place. It's a safe jurisdiction. The key assets are on private patented ground, which means permitting is much more straightforward. We got our drill permit in 48 hours. Even at 360 gold, this thing was in production. Well, today we're at $4,200 gold. And yes, there's been inflation, but when you compare inflation to the gold price, I know gold prices have dramatically increased since the 80s. If you like gold, if you like safe jurisdictions, if you like high grade, if you like exploration upside in every direction, then this is a story you should take a serious look at. And if you like management that have put their money to where their mouth is, Arizona Eagles is a company you should take a really good hard look at.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only. For disclosure purposes, Arizona Eagle Mining is a paid-for client on the Investor Ideas website.
Kevin, it's great to have you back on the show. You have been very busy. We'll start off with big congrats on your 8.5 million financing. Quite the upsizing for the financing. Do you want to talk about what that means and where that carries you across the line for Arizona Eagle?
Yeah, thanks, Cali. It's great to be back here. There's been a lot going on with the team and the project since we last spoke. Everyone will know, we're now public under the symbol AZEM on the TSX-V. So we are now trading, and a big positive for us. And it's also allowed us to access public capital markets, whereas before we were doing private raises. So yeah, lots going on. I've been out there doing some conferences, a fair amount of marketing, just getting the story out. Being a newly listed company, it's really about getting the story out there so people know who we are and how to find us. So yeah, there's been lots going on, and as you mentioned, we just completed a significantly upsized financing to our previously announced $3 million financing. Even though the market's been a bit choppy, as I'm sure you and your listeners are aware, we had a lot of incredibly positive feedback from the investing public. So we actually upsized our deal, as you rightly point out, from 3 million to over 8.5 million, almost $8.6 million. So obviously, we're very pleased to see the feedback, and people excited to invest. We had a lot of subscribers. Actually, we had close to 100 subscribers in this financing. So we're seeing a broad distribution of investors, and that's obviously the $8.5 million is going to help us carry these projects forward.
Do you want to talk a little bit about the potential acquisitions that you have coming up? Past producing silver mines along strike near the McCabe Mine looks fantastic. What is the strategy of building out that district scale with those three potential acquisitions?
Oh, great, Kelly. Thank you for bringing that up. So you're right. We announced a little while ago, prior to announcing the financing, probably a little over a month ago, we announced we've entered into an agreement to acquire three past producing high grade silver mines. Historic production was on the order of 20 ounces per ton, so quite high grade. And these mines were mined to shallow depths of no greater than really 150 meters. So shallow. So they would in the early 1900s they'd mine just the oxide, just basically to the water table, but below, what we believe could be a kilometer or better, they are open. So as you rightly point out, it's along the trend, and if people go to our website, they can see our presentation. They can see where these silver projects are outlined in green boxes. It is a long trend with the past producing high grade McCabe gold mine. But interestingly, it's not far from the Iron King VMS deposit that produced nearly 1 million ounces of gold, nearly 1 billion pounds of zinc that is recorded, plus silver. So what we're seeing and what we have to believe there's potential for is this transition almost or morphing from these historic VMS targets that also have zinc and silver and gold. There's a possibility for VMS targets out there as well, which our geologists have noted from their surface mapping and surface sampling. So yeah, it's exciting to get these deals closed off here in the coming weeks. So we own them. It nearly doubles our strike length McCabe asset, all with past producing mines along the structures. So it's incredibly exciting.
With your financing, I'm assuming that takes you across the line for the acquisitions, and then does that also count for drilling on the McCabe deposit and the silver mines as well?
Oh, absolutely. Yeah, that's a great question. What we're paying for the silver assets is approximately 1.3 million Canadian. So we raised as I said, nearly 8.6. Plus, we had working capital greater than $500,000. So close to actually a little over $9 million in working capital. 1.3 would go to acquire those silver mines, which would leave us approximately 7.7. So we'll still have a fairly robust balance sheet after doing the silver acquisitions, depending on what we're seeing. But yeah, there is money with the current raise to work on those and pay for those silver projects.
Do you want to talk about the share structure where you're at now, and then insider ownership? Has that changed a little bit as far as like you were at like 53%, I think, if I'm correct, and like where's everything standing now after the financing?
Great question. Still major shareholders. The insiders and management own approximately 27 million shares. And prior to the financing, that was 54% of the 49 million that are outstanding. On this financing, it's, as I mentioned, it's almost $8.6 million. It was done at $1.10. So just under 8 million new shares are being issued, plus a half a warrant at $1.50. So that would be, approximately 57 million shares basic outstanding after post financing with our obviously increased balance sheet. So again, we're still major shareholders owning 27 of the 57 that are outstanding. So, still the three, four major shareholders are still approximately 50% of the company. Plus, of course, we will have options and those types of things too, which will keep us aligned with shareholders. But yeah, still have obviously heavily invested, well financed now to continue to advance what we believe is an incredibly exciting precious metals and also potentially VMS, copper, volcanogenic massive sulfide copper and zinc targets as well.
I think it proves investor confidence that you could raise that money in the market and the volatility, especially currently in the last few weeks. I'd love for you to talk a little bit about your drill results that came out. I know you only have a bit that's out there for the public and assays pending, but you've had some fantastic results to start us off with.
Thanks for bringing that up, Cali. Again, it's our phase one on the McCabe mine was targeting outside of the historic resource. Now, just coming back just quickly to the McCabe mine itself, it was in production in the late 80s and closed by BHP Billiton in the early 90s. And it was closed in such a way that it was capped. It wasn't backfilled, and it was capped, and it was done in a way so that they could go back. And as we know, BHP Billiton in the early 90s, well, they got the project by acquiring Magma Copper for $3 billion. And so they went to build Escondida and build obviously a conglomerate mining company with many different commodities. At the time, it was really copper focused. But this asset was reclaimed in such a way that it was just basically capped. And what we're seeing is we are exploring getting the mine dewatered and doing those types of things to see if we can gain access to the mine. So these are things we're exploring. Our drill results were targeting the approximately 350 meter level. outside of the historic estimate, which is 878,000 ounces at 11.7 grams per ton gold recovered after mining and processing. So extremely high grade gold. And on hole number 2, we discovered the zone. It had been faulted to the north. So there's a fault there, which we were aware of. And yeah, we discovered the zone. We hit nearly a meter of 11 grams per ton, which is typical mining width and grade they were using. But what's really interesting is we learned that there's actually nearly 5 meters of almost 6 grams. So what we're learning is when we lower the cutoff grade, again, the historic estimate was done at 360 gold, and they used a 6.8 gram per ton cutoff. Now they're mining 3 to 4 grams in Timmins and other places. So, that those wouldn't be mines based on our cutoff because our cutoff was done at 6.8. So what we're learning is you lower the cutoff to, more typical cutoff grades like 2.5 grams for these underground mines, you're getting more gold. So in our historic estimate, it was done at a 6.8 gram per ton cutoff. What happens when you expand just that envelope? How much more gold is there? So that's something obviously we're going to need to understand, and we're going to need to pursue. As we've mentioned many, many times, is that it's open in all directions. And what we're working on is how, if we want to get in, just hit the proven and possible resources and reserves and the historic estimate, how could we do that most effectively? Drilling from surface is obviously one method, but is there an opportunity to open up the concrete lined shaft that BHP capped back in 1993? And if we can get underground and drill from underground those high grade historic estimate of reserves and historic estimate of resources from underground, we believe that could be something very interesting for the project. It's 20, 30, $40 million in 1980s dollars of infrastructure that we have that we are exploring. How can we incorporate that into our plan going forward now that we have a more robust balance sheet? How can we incorporate using all that infrastructure that is still there, hasn't gone anywhere, into a go forward plan at McCabe? How could we benefit? How could our shareholders benefit from this past producing mine that has a shaft that was concrete lined, that was only closed, in the 90s? This is what we're going to explore with our dramatically improved and robust balance sheet.
As the story started, it was a consolidation of a land package that you guys put together, and it's a fantastic land package. And now with the acquisitions coming online, how much bigger are you planning of like a district scale? Like, what's the long-term strategy with the 3 acquisitions and the McCabe mine, like to consolidate them all into one and like see how that goes? Or I guess like assays pending and
Well, yeah, it's a very good question, Callie. We have a district scale property, and it's really about managing return on our investment, right? So we have, as I mentioned, we just raised $8.6 million. So our purpose is to drive value and continue to build market cap. We don't believe we're valued properly. We believe we're a new story. Well, we know we're a new story to the capital markets. We're off a paved highway. We have a power line. We're in a place we know we can permit our mine. And we've got all this infrastructure in the forms of shafts and underground workings and historic reserves and resources that we don't believe, with our 60 million market cap, we certainly don't believe we're being valued like we have 800,000 ounces of high grade gold sitting off a highway. So that's for me to fix, obviously, and the team, by getting the awareness out to the market, and we will. But it doesn't change anything. We have a methodical approach. These things take time. Getting underground will take time. Drilling takes time. Getting assays back takes time. But our plan hasn't changed. It's continuing to demonstrate to the market that we have a high grade, potentially low cost gold asset with many, many, many kilometers of strike length, with many, many past producing mines scattered across it. The plan is the same: continue to drive value through the drill bit. It's the same plan to advance the project and do it in as a methodical and cost effective with best return on investment as possible. And as we can lay that plan out, we will. Today, we're still in the process of putting the plan together.
as you mentioned, I definitely think you're undervalued. There's a lot of great stories that are undervalued, especially currently with this volatile market. You can actually speak a little bit on the macros with your background. Like what would you want to share with potential shareholders or current shareholders as we ride some very volatile times in the market for junior resources?
Well, for us, it's working backwards. It's why we got in this project in the first place. It's the commodities we want to be in. It's gold, it's silver. We have excellent copper potential, zinc potential. But really, the anchor is this gold and silver high grade mine with it's open in all directions. So, number one, we're in the commodity we like. We're in a place we know we can mine. It's a safe place. It's a safe jurisdiction. It's when we're on patented ground. The key assets are on private patented ground, which means permitting is much more straightforward. We have second to none infrastructure. So mining, finding these deposits is obviously challenging, and that's why companies tend to go to remote areas and to more complicated jurisdictions because they're sought after and they're extremely valuable when you have them. So what we have, and what I believe investors are not fully recognizing, and I believe they will, is the fact that we are on patented ground. We have the ability to permit this mine. We know this because it was permitted. We are not on Bureau of Land Management ground, the key asset. It's on patented ground. You can still work with the BLM, of course, but we will potentially on our other BLM projects. But this one is on patented ground. We got our drill permit in 48 hours. So it's an excellent jurisdiction. We have a high grade gold deposit. So, even at 360 gold, this thing was in production. Well, today we're at $4,200 gold. And yes, there's been inflation, but when you compare inflation to the gold price, I know gold prices have dramatically increased since the 80s. So we have incredible infrastructure. We've got a concrete line shaft that we could explore rehabbing and getting back underground. So there's $40-50 million of historic infrastructure that we still can tap into, which we haven't yet, but we're exploring doing. If you like gold, if you like safe jurisdictions, if you like high grade, if you like exploration upside in every direction, then this is a story you should take a serious look at. And if you like management that have put their money to where their mouth is, Arizona Eagles is a company you should take a really good hard look at.
It's a fantastic story. I'm totally convinced. Kevin, as we come to the close, what can investors look forward to? Obviously, assay is pending. Some press releases down the pipeline, any conferences or anything else that they can connect with you or look forward to for the summer and into the fall?
I haven't booked any conferences yet, but the plan is over the near term to start looking at the schedule. I just came off doing some conferences in Florida and in Europe, but yeah, I will be getting back on the road likely in the early fall and start doing conferences. But I'm Cali, happy to do these podcasts and of course anytime you're available and continue to keep the market informed.